Can you guys hear me? Type 5. All right. Start this now. And whoever is going online is going to be able to see this. Eventually it's going to be posted up in my YouTube channel, so you guys want to subscribe. I'm going to show you real quick my YouTube channel. You guys can subscribe for more videos. I got a couple videos in English, but mostly in Spanish. Let me also know if you guys would like to see more of these free trading webinars. Okay. And I'm going to do this one in English. Most of the people I work with actually speak English, but we're all from Colombia. We all speak Spanish. All right, so I want to do this to start just sharing free education, guys. Honestly, that's all I'm doing it for. I'm doing this so that you guys can learn for free. There are things you can definitely learn without paying even a mentor. Okay, so is it important to pay a mentor or have a mentor or work in a team? Absolutely. And I'm actually offering you also my help if you guys need anything. On the live chat, I've left my phone number, my email, and also my Instagram pages. Okay, both personal and the Forex Instagram page I have. However you got to this video, to this live stream, to this webinar, welcome. I'm glad you did somehow get this link. And I hope you guys enjoy this. I'm going to make it as enjoyable as possible, as quickly as possible as well. If you guys have any questions, let me know. If you guys would like to translate into Spanish, let me know. Okay. What I'm going to be talking about in this webinar is just some basic trading strategies, basic price action analysis, technical analysis, and some fundamentals. Okay, so if you guys are new to Forex or don't really have much sources of information, I strongly recommend you go on this website called ForexFactory.com. Here you will see the economic calendar up in this tab. And what I do is I filter out the most important events only. Okay, so you apply that filter and then you'll see these red and orange folders. Okay, this is a great page for your fundamentals. I'm pretty sure you've heard of it before. And basically you have the information of every event, the time, the date, which pair is going to affect, and the usual effect, which is very awesome because you can kind of understand what could happen to your chart and to the price depending on the outcome of the event. Okay, so what you're going to see is the forecast numbers on the middle column, your previous numbers and digits on the right, and your actual and released number under the actual tab. Okay, sometimes a green button will appear, this one right here, and you got to click it so that whenever the event occurs, so let's say it's 4:45 and I don't see an actual number, I'll see a green button here and I have to press it and that will show me the new digit. Okay, so anyway, understanding these economic events isn't as necessary for technical analysis because that's fundamental analysis, what we're doing on this website. But understanding what it does, just knowing what happens to the graph, to the chart, I mean, is important. Okay, so I don't want to get too much into macroeconomic interpretation, but that's pretty much it. You got to understand what happens to the market and to the economy based on these numbers. Okay, so anyway, I just wanted to show you guys this website. It's great for these events. Let's dive into the charts. I want to show you guys the charts. This is euro dollar, 4 hours. I had this chart since the weekend, and here's my analysis. And I did this before price fell down over here. I had this channel drawn, and I'm going to start from 0 so you guys can see it. So I'm going to pull out another graph right here. And even though this one has a similar analysis, I'm just going to erase it. And let's start. As you can see, my charts don't have any indicators. I don't use MACD. I don't use EMAs. I don't use SMAs, RSIs, stochastic oscillators. I used to a lot. But I've come to the conclusion that the more indicators I use, the more distracted I'll be. And sometimes I'll get false signals. Okay, so I want to go back over here and type that because indicators can give me false signals. They also prevent focus, price action focus. Okay, this is very important because sometimes you see an indicator showing you something and price doesn't necessarily do that. So say you have an indicator showing you, okay, price is overbought, say the RSI, and therefore you need to start looking for a sale opportunity. It turns out you don't realize that on a longer term, say a daily chart, price reached a resistance and broke the resistance. Therefore, the probability of it to continue going up is higher than for it to drop and reverse on such resistance. Okay, I hope I made myself clear, and I'll repeat that again. The RSI, stochastic oscillator, and some indicators could show you that price might be overbought or at a very high level. However, that could mean when it comes to price action, when you see the charts, when you see resistance levels and so on, that could just mean that price broke a resistance and it ought to continue going up. Chances are it's going to continue going up. So sometimes people get blinded by indicators and make decisions based on indicators, and that to me is a wrong way of using indicators. Doesn't mean indicators are bad and they lie. It just means that you cannot and you shouldn't use them as rules of trading. Okay? You can use them to double check your analysis, for example. So we got that out the way. Let's talk about actual technical analysis. If you are new, if you're just starting, if you need help, if you're lost, always start by pointing out support and resistance levels. That is my most important recommendation to you right now. Use these levels because what they're going to show you is areas of support and resistance where price should reverse or consolidate. Okay? A very simple way of doing it is just pointing out these ends of the ranges. So a range is pretty much this that I just pointed out. This is a range. Okay, the market has been within this range for a while now, and you have to point out these areas because they're going to help you out in the future. Okay, so for example, here's another one. It's right over here. This is an interesting one where price made a false breakout. Okay, now is there a specific measurement to these areas? Does that mean that this rectangle, could I have drawn it up over here? Absolutely, because if you can see, and I zoom in, I got these wicks showing just falling over here, but the candle's closed right above this rectangle. So yeah, your areas of support and resistance are going to be, they could be quite wide. Okay, so look, if I extend this one all the way back here, you see that I'm covering the wicks and I'm also covering a couple candles. Okay, so this is step one. This is really the most important step, because what this is going to help you do is going to mark the market for you. It's going to mark the price. So in other words, when price reaches this point over here, very top of this resistance area, it's a sign for me to start paying more attention, close attention to lower time frames. Okay, that's another thing. I don't want to get into it right now. I will, but write it down if you want. Say you are in the daily chart and price reaches a resistance level or a resistance zone or a support area or support zone. That means you have to pay close attention to lower time frames. Okay, always go back and forth between high time frames and low time frames. That's a very common question I get. Felipe, what do you trade? What time frame do you trade? Which is your favorite time frame? What time frame do you look for your entry points? And I always respond, every time frame is important. The market moves the exact same way in every time frame. Going back to this specific example, we are the 4-hour chart, euro dollar. Price seems to be getting closer to this resistance area. And if it does happen, when it does happen, because it probably will, then I go back down. I go maybe to my 1 hour to half an hour time frame. And I'm doing this because I want to spot, I want to find, I want to fish an entry. I want to wait for the right moment, or at least try to wait for the right moment. Remember, it's very hard to time the market. It's actually in my opinion, it's just impossible. You will never be able to always say in 1 hour the market is going to reverse or whatever. But you can find confirmations. You can look for confirmations, and then that's when you pretty much enter a trade. What confirmations am I going to be looking for up over here? Selling confirmations, or maybe a change in direction confirmation. Say a candle, for example. A bearish engulfing candle would be an awesome trade signal for me, and that would look something very similar to this over here. I'm going to zoom in, and I'm going to show you what I would want to see the market do as it reaches that resistance area. So as you can see over here, price was going up quite strongly, and a number of things happened here, and I'm pretty sure this will probably be the first time you'll ever hear this. Two things happen over here. One you probably have heard, which is the bearish engulfing candle. But the one you probably haven't is the change in sizes of the bullish candles. Starting this one is pretty big, obviously. Clearly, it's got momentum and decision. Okay, I like to call these decision candles. But what happened with the next three candles, quite interesting. Not only is there wicks, but the sizes change, and they're very much smaller than the one, than if you compare it to this one. What that means is losing strength, losing momentum, and uncertainty. Pretty much the market here, even though it decided already, there's a decision candle, price has momentum, is going up with strength, it just started losing strength. It slowed down, it showed some wicks, and then it was this candle that pretty much helped me make that last decision of it trying to go down. That's what I'm going to be looking for over here. Okay, it doesn't necessarily have to be exactly within this resistance area. Remember that this is also a resistance area over here. So anywhere between this area and this area, I want to see something like this. I want to see price slow down. I want to see price start showing rejection with these smaller candles with higher wicks. And eventually I want to see my confirmation candle, bearish in this case, engulfing candle. Okay, that is one very simple way of trading with resistance, support, and candle analysis. That's it. I can stop right here, and you guys could work with this, and you'll probably do some good trades, because it's a very simple but very effective way of analyzing the market, okay, based on resistance, support, and just market behavior. What happens when price reaches these key areas? Does it slow down? Does it break it with strength? Does it continue? Okay, let's talk about a bullish example. What happened here, for example, when price was falling, we had these big candles. As price reached such a low level. If you compare it over here, there's a sort of support area. If you extend this all the way over here, look what happened to the market, to the candle specifically, as it reached that key area. Whoops, let's go back. Okay, so I'm gonna go back here, and we had the 4-hour chart, and I was talking about this specific moment. And as I said, big candle, decision candles. But as we got close to this support area, I start seeing a change in color. For example, look at this rejection candle, green candle, and look at the wick at the bottom. Is that my confirmation candle? No, not yet. I want to see something else. Maybe this one with this big wick at the bottom. It's sort of a hammer. Remember, a hammer candlestick doesn't have such a big wick at the top, but it does have a squared body and a long wick toward the bottom. This is a regular hammer candle. So what am I spotting in this specific moment? A confirmation candle that shows rejection at a support level, and therefore the intention of it rejecting this area and changing direction. Will I know it's going to change direction? No, it's impossible to say, oh, this is going to happen. I know this is going to happen. It's just these things are not, I'm not inventing this. I'm not just saying this. It's based on just on historical data and probabilities, and that's just the way the market behaves. As it reaches these areas, something happens that normally marks the future of the market and its behavior. So the textbook says, and the market says in history, if you go back in time, a year ago, an hour ago, a second ago, whatever, you will see these type of behavior. Where I'm focusing on this orange circle at the right of your screen, when price starts falling, it reaches a support area, and I start seeing a slowing momentum, strength, there's weakness. It doesn't continue falling as hard. Look at that. And then here I see an interesting candle with a very long wick at the bottom. Now, normally that means rejection. Normally that means a bounce. Okay, so what I could do is enter with a buy trade. Where could I put my stop loss? Just under that wick, couple pips under that wick. Okay, why am I going to put it under? Why can't I put it like right there as soon as I enter, maybe like 10 pips away? Well, because there might be a double bottom, which is a very common pattern, chart pattern. And if that's the case, I'm going to get stopped out. And a couple pips after, the market is going to move it in my favor, and I'm going to say, man, if I had my stop loss just a little lower, I would have stayed alive. And another reason why I'm going to put the stop loss at the bottom of the wick and not right on the wick is because there might be a false breakout. There might be a false breakout of that last possible support area, but then the market could then go back up. And that happens a lot because, as you guys know, and if you don't, and you're new still to Forex, there's a lot of manipulation. There is a lot of manipulation. And manipulation, it comes in various forms and ways, but one very common one is, let's say you have your stop loss here at the bottom. The market, what could do is just go down. It'll stop you out, you'll lose, and then it will go right back up. And that doesn't just happen to you. That doesn't mean Forex is not for you. That means you're not a loser. That means you're not the problem. 1,000 people's problems. 1,000 people just got stopped out. We are all losers when this happens, unless you know how to prevent it. So your stop loss, going back to this specific example, you're going to put it a little bit lower than that last wick that you see here. Remember, we're in a buy trade because we're seeing price falling. It reached a support area, and we start seeing a specific behavior in this key area of support that is trying to show me that the market could and it might change direction. That's all. That behavior is this specific candle with a very low wick, and I could take my risk. I'll say, all right, I'll take my chances. I'm going to buy. And in this specific example, we did a pretty good trade if we would have bought that that support, and market went back up to that resistance area we had at the top. And we see that pretty much the same thing happens. And if you, and this is funny, if you flip your screen and you say that this is the support, just like over here, is the same thing. You see strength, and then you see a change in direction with a big candle. In this case, bearish engulfing candle. Market is going up. I see strength, but then I'm seeing a slow, it's slowing down, a momentum, weakness, and then confirmation candle going back down. In this specific example, what I'm just seeing is indecision. I don't necessarily see strength and then a big change in direction. I just see indecision. I see uncertainty. I see a big battlefield over here between bears and bulls. And am I going up, down, up, down? No, I want to go up, down, up, down, up, down. And you can mark these ranges. I invite you to mark these ranges. So we've got a range over here. I'm going to draw this in a different color. Actually, I'm going to leave it like that because you can see it. I've got this range, and obviously I don't know what's going to happen when the market slows down over here. So what I'm waiting is pretty much a breakout of one of these areas, whether it's the top of this range or the bottom. Okay, and that's how I can also make decisions when the market is not yet at a key support or at a key resistance level. Okay, so say you lost this trade. Say you got to your house or whatever, you're at the office and you've seen this and it already happened. Now you're over here. Now you say, okay, well, I mean, I don't necessarily have to trade, but if I see the breakout of this range, I could take a trade, and let's see what that could have been. So I see just a fight going on, bulls, bears, bulls, bears. Oh, that's an important candle. That's an interesting candle. That candle closed outside of this range. It closed outside of this support area over here. And therefore, that means it wants to continue going down. Now, where could it go down to? Where is it going to stop? I got to check the past. This is a very important price range where the market in the past changed direction. It went back up. So what I can do is either I wait for the market to get here and buy, or I sell right now to kind of get a quick scalping trade from here to here. Okay. What happens next is one of the most simplest, I don't know if to call this a pattern. It's not a pattern, but it's a setup. Okay. What you see after this big candle, decision candle that broke this support area. Now I'm going to erase this and this so you guys can see it. We've got this support area right here. Okay. Notice I am putting the top of my rectangle where these candles are closing, where these candles are closing. Some of the candles are closing within the rectangle, but I need to get these wicks as well. I cannot ignore the wicks. My support is not up here. It's not just that little line. My support is all this area. Okay, very important. What happens with this candle? What happens next? You guys know this. You guys have read this. You guys see this. There's pullbacks. Okay, so breakout, pullback, continuation. That's like gravity, man. That happens. I mean, you jump, you're gonna fall back down to the ground. Okay, market breaks an area, it's going to pull back and retest that area, no matter what. Like this happens every time. Okay, and it happens right away. It happens hours later. It happens days later. If you guys open up the weekly chart, daily chart, you'll see breakout of key areas like support and resistance areas, and within weeks or months, price is going to retest those areas. Okay, there's a saying: market repeats itself. The market, the history in the market, it repeats itself. That means price goes back and forth, crossing these ranges, crossing these areas. Okay, and that happens within days, months, and it happens within minutes, within hours. Okay, so going back, we've got, I want to show you guys what I mean very specific. We've got a breakout with this candle. A breakout of what? A breakout of this support area right here. And immediately after that, a couple hours later, in this case, because this is an hour-based chart, we got a pullback to retest this area, this support area that has been broken. If I continue, look what happened. Market got back into that support area that has been broken, and it is now a resistance. And we've got a continuation, at least to the end of that range, of that initial range. Okay, look at that. And oh, what are we seeing over here? It went into this even older support, if you want to call it. Okay, so this is, I could have gotten a couple pips from here to here. That is a quick, that is a I'd say it's a small trade. It's not a quick trade because it happened within a couple of days, but this happens on the minute chart, on the 5-minute chart, on the 15-minute chart, and a trade could last you a couple of minutes. I mean, personally, I like to close my trades within 5 minutes. Okay, that's just a very personal way of, I'm a scalper. I like to scalp, and that means I'm not holding more than 5 minutes, period. I don't care if market could move 1,000 pips, that's being very sarcastic, but I don't know. I just don't like to hold too long. So going back, we got another range. Look what happened here. We got another range. Remember at the beginning of this explanation, I showed you this rectangle. This rectangle, is the battlefield between bulls and bears in this moment. But look what happens. If I copy and paste it, here's another thing that you don't learn in books, or at least not until you got a couple months sitting and reading. If you copy paste that battlefield, you're going to get it right there as well. Okay, so what happens next? Another battlefield. Here it is. So here bears won, another battlefield, and then what happens? Bulls win. And we can go back to that setup. There's a resistance of this range. There's a breakout, and look at the pullback to that area. What happens in this case? This is another common setup where you got breakout, but then the market goes back into the range. Okay, so this is the initial range. The market went back down, and it broke it. It broke it, and now what it did was it looked for this older support area. Look where price went into, and that's where it finally bounced back up. This is another false breakout of this range, for example. And to be honest with you, a lot of people lost big time here and here. Okay, this is very unfortunate when this happens, because a lot of buyers are entering here knowing that the market broke out of a resistance, is making a pullback, and a lot of people are buying right here, expecting price to go back up here, but then they pretty much lost. I mean, your stop loss in this buying trade would be a very, very tight stop loss would have been under these candles right let's say right about here where the end of that arrow is. Some people put their stop loss under this range about over here. And in both cases, they lost. Okay, so here is one possible stop loss level. Here's another one, and they both lost pretty much. And now what's happening is many sellers are now saying, oh, the prices, it broke out of this support, is testing this support. I see it broke it. Look at this. Oh, I'm going to wait for the pullback of this support and I'm going to sell. Okay, so let's go back. We got the support. We got the breakout, the pullback right there. So pretty much here, people are saying, okay, I'm going to sell this because it broke support and it should continue to fall, right? So pretty much something like this. Breakout, pullback, continuation, and it filled this small range after the breakout. So we got breakout, pullback, and therefore I could sell. But what happens next? The same thing it did in the opposite direction is now going up. The market just took out everybody who sold and put their stop loss here and here. So there you have it. That's an unfortunate case. But what's the lesson out of this specific example over here is that you need to pay attention to older support areas. Okay, if you get, I was talking to someone a couple of days ago. I remember it was last week, and they were asking me, what time frame do you like to trade? What time frame do you recommend? What time frame do you analyze? And instead of just saying I analyze every time frame and just taking that and not explaining it, the example I said was, imagine you're driving. Okay, imagine you're driving in your car and you're only looking ahead of you to the car in front of you. You're only looking at its wheels, at its plate, whoever's in the car. You're only focusing on that car. My question is, what happens if you never look ahead of the car, if you never look to your right, to your left, if you never look behind you? I mean, you're pretty much you're driving blind. You don't know what's going on around you. And out of nowhere, that car could make a very tight right turn and you'll crash, or some other car might try to go ahead of you from your right side and you don't see it, and it maybe ends up crashing next to you. Here's the thing. As if you're driving, you always have to look around you. You always have to look ahead of you, miles ahead of you, as far as your eye can see, behind you, next to you. You got to be aware. You got to be aware of the general situation. If you relate this to trading, that means that if you're only driving, looking at the car in front of you, you would be stuck looking at one time frame only. For example, the 5-minute chart, the 15-minute chart, or the 1-hour chart. But you're ignoring the daily chart, the weekly chart, and the 4-hour chart. These are very important time frames that you have to look at, because they're going to show you and they're going to talk to you about the general situation. In this case, if we were to be looking at that 30-minute chart, I guarantee every one of you, every single person, even myself, will get stuck in this big drop, in this big momentum drop. So let's do the example. Let's go to 15 minutes. Okay, 15 minutes. Look at that big drop. Here's the big drop. Everybody would be getting stuck on. I think that's it. Yeah, that's it. Okay, so if we're here, look at what I'm seeing. I don't have much. I mean, this is all I'm seeing. That's nothing, okay, compared to what we were looking at the 4-hour chart. But what I want you guys focus on is this big drop. This is big. This is emotion right here. This is emotion. This is you going, oh my God, it's falling. I'm gonna sell. And you probably won here, definitely. And you're like, oh my God, I'm flying. I've got $10. I'm selling over now. I'm selling again. Oh my God, I got another $10. Oh man, I'm in a row. Blah blah blah. And then you guys keep selling, and then just boom, you're pretty much Now you're saying, okay, I'm gonna keep selling. Price has to continue falling, and then up, whatever, and you're not paying attention to the fact that this right here, if we go all the way back, notice how much I have to go back in the 15-minute chart. Everybody get lazy. Everybody start going back and I don't see anything. All right, whatever. And you go back here. That's not going back in time. That is not checking other time frames. You don't just stay in the 15-minute chart and go back and see whatever. All right, that's not. Shut up. Okay. If you do your homework right, you gotta go back to another time frame and see that over here in the past, way before that specific moment you're stuck in, price bounced. It changed direction. And that's what I'm saying when you have to go back and understand the general or the big picture, So we go back, 4-hour chart. Where's that big drop? Here's that big drop. And what am I noticing? That the market here is behaving in a specific way, just how it did over here, just how it did back over here, and so on. Okay, and that's what I have to do. Okay. Now, let's talk about the present. Let's talk about what's happening. Why is the market doing what it's doing? Let me know if you guys still hear me perfectly or fine. Let me know if you guys have any connection problems. I believe we ran into a short lagging. So type 5 for me if you guys watching me can hear me. And if your image is clear and running smooth. If there is connection problems, we can wait a few seconds. Okay, I think we're back. All right. Okay, so let's clear our minds a little bit. I'm going to erase everything we've done. And based on what we've just talked about, and notice how it's very simple, let's analyze what could happen, and let's try to understand why the market is doing what it's doing right now. Okay, so I'm going to stay with only 2 areas right now. I'm going to stay with this resistance area I just drew right here, and with this support area. The support is going to mark my change in direction, and the bottom of my range, and the resistance the top of my range. Another way of doing this, but I don't really like to do this, is just literally draw a big rectangle of that range. Okay. So what this can help me do is pretty much say sell over here, buy over here. Whatever happens, you do. All right. Trade what you see. Also, what this tells me is if the market breaks that resistance area over here, then you wait for the pullback to that previous resistance, now support area, and buy. And where to? No more than this resistance area, because there is no guarantee that the market will continue breaking resistance areas to go even higher. What can happen here is market going back down into this range, and it'll stay within that longer term battlefield between bulls and bears. Okay. Now, how can we maybe trade it now? I know a lot of you are saying, okay, well, if market should look for this resistance area, well, couldn't I buy right now? Would it be a good idea to buy right now? Well, I like to think of it when it comes to that specific question. I like to think of it as probability. Okay, so let's talk about some couple of probability. Now, bear with me. I'm going to mark the middle of that range. Okay, this is the middle of this range. And what I ask myself is, or the way I like to think is, if the market is at the middle of a range, that's pretty much a 50-50 chance of it going back up or down. Okay, so I'm going to write it over here. When the market is in the middle, right in the middle of the range, there's just a 50-50 chance for a trade, for me to win, whether I buy or I sell. That's a bet. That's pretty much a bet. What happens though when when market reaches a resistance area right over here? Well, this is not going to be 50% anymore. Let's say it'll probably be a 20% chance. And what the chance I'm analyzing is my losing chance. So what is the probability that I lose if I trade here versus the probability of me losing if I trade over here? So if I sell the resistance over here, what are the chances of me losing that trade versus if I sell when the market is over here? Okay, so say the market, say price already goes up over here where it needs to go. I'm going to make this a little bit stronger so you can see. What is the difference of me selling here versus selling when the market is already dropping from there and it's currently here? Okay, so what could happen is that if you sell down over here at the middle of this range, the market could easily go back up. Okay, because that's an important area of traffic. Traffic, I mean a lot of candles in the past, and an area where price kind of stayed for a little bit. So here price kind of slowed down, it slowed down. Eventually it broke out and it continued falling. And here is going back up, but notice how it hasn't gotten stuck there yet. So what could happen is once the market reaches this resistance area, it could go down over again. It could try to behave the way it behaved previously over here and eventually go back up. So it's a smarter trade. It doesn't mean it's wrong or best or whatever. It's just smarter for you to wait for the market to get to this area where there is a lower chance of you losing that trade than just to take a bet. Honestly, this is just a bet. Okay. Now, why isn't the 0% chance of losing? Because there's never a 0% chance of losing in trading. There will always be some sort of, probability that it breaks out. So that other 80% chance there is, that 20% chance of losing, I'm sorry, it means that there is about a 20% chance, in my opinion. I mean, the numbers aren't correct. It's just a way of, remember, at the beginning of this specific topic I'm talking about, it's just the way I'm thinking. Okay, you guys are not going to find this in a book unless I write it myself. Okay, so that 20 chance of losing means that market could just go boom and it could continue going up with a lot of strength, break that resistance, and therefore I'll get stopped out if I sell. Okay, but it's just a smarter trade than any trade, for example, right now. So think of it this way also. At this point, there's probably, say, I don't know, 40% chance of losing. Okay, because we see price has strength. It wants to go up. It continues to go up. Here's another range. Look at another range over here. Okay, it's breaking out. So I wouldn't sell right now. I would wait. And that's where patience is key. I know you guys hear this a lot and read it. Patience is key for success. Patience is key for trading. Patient is not opening a trade and just waiting to win. Okay? That's not patience. Patience is wait for your setup. Wait for the market to give you the conditions you're looking for and that you need to trade. In this case, I'm going to be patient and wait for the market to reach this area of resistance where I have more chances of winning a sell opportunity, a sell trade, and not taking any trades right now, even though I think or I believe, or let's say your bias is long right now, and you like to say I know what's going to happen, and you're right. If I say price might get here, it probably would. That doesn't mean a buy would have been smart. It would have been luck, more luck than knowing that the market behaves a specific way in a resistance. It's less luck and it's less of a bet when you understand what happens in such resistance area and you wait for confirmation. That is also part of being patient. So remember what we talked about in the beginning. What happened over here? I'm going to wait for that or something very similar to that, but over here. Okay. So one thing is waiting for the market to get to the point or reach a specific area that you're waiting for it to get to. And another thing is waiting for a confirmation of a specific behavior that you want to happen or you know could happen. In other words, I know that resistance means sell. I know that if I wait for the market to get to that resistance, there has to be something for me to be more sure about that idea. And that would be, for example, a bearish engulfing candle, a couple of wicks. Okay. I hope I'm making myself clear. I hope this is a very comprehensive way of analyzing the market. I'm not going to make this any longer. I mean, I want this webinar to be easy, simple, straightforward. And this is just step one of many, many, many strategies and many ways you can analyze the market. And as you can see, it's very simple. And you might be thinking to yourself, man, this is easy, but it's not. It's easy to see it. It's easy to understand it, maybe. It's not rocket science. What's hard, though, is controlling yourself, emotions. It's real money. Okay, and when you start winning, you get excited. When you start losing, you get frustrated. So that's the hard thing. Okay, before I end, please let me know if you guys have any questions. Give me a thumbs up on this video. Subscribe to my channel. I know there isn't many videos in English. As a matter of fact, I think this is the only one in English. But I've also left at the beginning of this video a quick question for you, and that is if you'd like to see more of these free trading webinars. If that is a yes, I will obviously start making these more often. Subscribe, like I said. Follow my pages on Instagram, however you got this link. That is it for today. That is it for this session. And I hope you guys enjoyed. I hope you guys understood. I hope you guys apply it. And thank you for watching. Good luck. My name is Felipe. Talk to you soon.